Okay, welcome to today's webinar. I am very, very excited to have Nick here and talk about malpractice and disability insurance. And if you have any questions, I'm going to be paying attention to the chat. I will have myself off screen, but if there's any questions that come up, feel free to put them in the chat and I will ask questions to Nick along the way. Or if you have any questions, if you want Nick to reach out to you directly, then feel free to let him know, let us know his contact information. And my contact information will be in the last few slides. So we will be here if you need us, but I will have you take it away, Nick. Tell us about who you are, why you're talking to us today, and what are the good things that you can help us with.
Yeah, 100%. Well, appreciate all you guys coming out today. As Wendy mentioned, my name is Nick Miozzi. I'm one of our financial services associates here at Treloar Heisel. My role at our company is I go and speak to all of the dental schools, GPRs, AHDs, specialty residency programs across 4 different states. So Ohio, Indiana, Kentucky, Michigan are the states that I cover. Treloar Heisel is a national company, so there are other advisors like myself, other regional vice presidents that we kind of all work with to cover the entirety of the United States, going in to speak to you guys as well. Normally, presentations that we do encompass sort of key financial decisions that students and residents will have to address as they're transitioning from dental school either into residencies or into professional practice. Today we'll kind of be focused on malpractice and disability insurance, as Wendy had mentioned, and kind of what to be looking out for when you are either, currently when you have your disability or malpractice now, if you're still looking into options, getting set up with those sorts of things, just certain things that a lot of times are, not mentioned in, maybe different reviews that you've had in the past. We sort of like to uncover these different things for you guys here. So I will start off with a little bit of an introduction of Treloar Heisel and kind of just why, again, Wendy and I have kind of connected and why we're the ones kind of speaking to you on these topics here. So, first and foremost, Treloar Heisel, we are actually the largest insurance planning and financial planning firm for dentists and dental specialists in the United States. So we service over 30,000 different dentists and dental specialists across the United States. What I really like to kind of emphasize on this slide is our advisory experience and then also our experience when it comes to things like claims, more specifically disability insurance claims. So when I tell people if you're going to be partnering with Treloar Heisel on, these different things that you might need, don't think that you are just working with, Nick from Treloar Heisel or one of our other advisors. I am one of 28 different advisors that we have. We have a support staff of over 50 members, a full property and casualty team of 30 members that help with malpractice. They help with business insurances for practice owners, as well as a full financial planning team with multiple certified financial planners. So we truly try to encompass, any and everything a dental professional would need in their careers, but be able to, house it all in one spot, allow you guys to work with all the best companies that are out there in these areas. But experience when it comes to disability claims is also, something that we have a lot of experience in. In the year of 2022, we were able to kind of help our clients get paid out over $40 million worth of disability insurance benefits. So that goes to the, recommendations that we are making, right? How these different policies are going to pay in different situations, because if something like this does happen, there are varying levels of how disabled someone can be. It could be a total disability. It could be a partial disability, or it could be something catastrophic, right? A catastrophic disability. So, being able to have those, products that are going to, make those payments. That's the whole reason you guys are buying and purchasing these insurance as you kind of move throughout your start of your career here. So, want to make sure we have the experience there. Again, another reason why a lot of people choose to work with Treloar Heisel, not only are we the largest firm for dentists in the US, but we're also the oldest firm too. So we've been working in dentistry for 66 years now. Actually got our start back in the late 50s. We basically partnered way back then with the American Association of Orthodontists. And since then, Treloar Heisel has become endorsed and partnered and sponsored by most of the dental specialty associations and academies in the country. So they've basically all put their stamp of approval on Treloar and Heisel to basically be the insurance provider, financial services provider for their membership, but also they tell us just go help out as many dental professionals as you can with this sort of stuff. Why they kind of choose to partner with us and not different associations or brokerage firms out there. Treloar and Heisel, we are independent from every insurance company that we do work with. So every year we sort of reevaluate all of our insurance portfolios that we have and make sure, right? These companies, this industry is ever changing. So have the products that we have changed anything about their contracts to where they, aren't as strong for a dentist or a dental specialist anymore? Is there something, better out there that we need to bring in and have available to you guys? So no ties to any of the companies that we work with, as well as we are non-commissioned advisors. When it comes to, again, talking about these products, recommending these products, there's no sort of like hidden agendas or opinions on these things. We are, strictly and solely going off of the, contractual strength of these policies, but also, right, factoring in things like, cost, financial strength of the companies and different factors that kind of come with that there. So, I guess moving a little bit further along here, we'll kind of start off with the conversation of disability insurance. So, health is a huge factor in acquiring this very, very important insurance. There are a lot of people that I speak to who will either, sometimes be considering getting disability insurance or not considering getting disability insurance. There is a lot of times what I see is, and we'll kind of talk about this a little bit later too with how it relates to malpractice and disability insurance. But disability insurance, again, with you guys starting out, you have put all of this time, money, effort into getting this education, getting this dental degree to ultimately lead yourself to a very good and very, hopefully large income stream for yourself, right? And now that we are coming out, we're transitioning into practice, we need to make sure that we are protected if something goes wrong, right? Dentistry is not only a physically demanding profession, but it's also a very cognitively demanding profession, which can deteriorate, us in certain way, shape, or form. So, with health playing such a big role in even getting this insurance, right? We need to make sure that we are getting set up with something, early and often, and making sure that we are reviewing our disability insurance on a continuous basis. So I mentioned the $40 million in benefits paid that we were able to help our clients get. These are just a handful of the different things that, some of our clients experience, during their time of disability. So it could be obviously the things that you think about and you consider, right? The physical, the musculoskeletal, right? You see back and neck pain. You see things like carpal tunnels or other things on there, but you also see the things that maybe we can't do as much, right, planning for, right? We kind of know our bodies as we go along will deteriorate, but things like car accidents or skiing accidents or cancers or an abnormal pregnancy that again people nobody plans to have those things happen to them. So disability insurance are going companies are going to do a complete sort of medical background check on you when you apply for these different types of insurances. So they basically will do they're trying to paint a picture of your medical history. So they look at things like pre-existing conditions. This could be chronic illnesses. This could be past injuries. Insurers can exclude maybe those different body parts or illnesses that have been hurt or something like that in the past. They can also charge higher premiums for those sorts of things. Lifestyle choices can obviously play a role. Do you do, hazardous activities? Do you smoke? Is there excessive alcohol consumption, right? Lack of physical activity in someone's life can cause disability insurance to maybe be modified when you're trying to get set up with it. This medical underwriting process, these when you apply for these insurances, you'll do a medical questionnaire, right? Yes or no questions on your health. And right, they're going to look into medical claims data. They're going to look into doctor's notes and doctor's records. They are going to even look into things sometimes like driving records, right? If you've been in an accident, they're going to want to know, did you get hurt in that accident? So making sure that if you are looking into disability insurance, if you have disability insurance, reviewing it to see if you are in the best spot, not only medically, but we'll also get into in the next couple slides here, is the policy set up the right way to, cover you in the correct area. So there's different types of disability insurance. And the two types that we kind of will like to discuss here are going to be individual disability insurance and then group disability insurance. So I see this a lot. Some people, I'll talk to out of dental school or residency programs, and they a lot of times say, my employer is offering me disability, they're offering me malpractice. I'm just going to take those and I don't need to get my own disability or malpractice. We'll get into the malpractice again conversation a little bit later, but if we focus on the disability insurance, as I mentioned, right, disability through an employer is a lot of times what is called group disability insurance, right? It's provided through a group, usually maybe like DSOs, hospitals, universities, or maybe like large group practices might offer something like a group disability insurance plan. Now, group disability insurance is a great tool in some situations, but we do not want to rely solely on group coverage as our only disability insurance. And why you might ask. Well, group disability insurance there is basically able to be changes made to it. So they are able to change things like rates, definitions, language. They can change who they use as the carrier for the group disability insurance. That could be for the betterment of the person, or right, it could be a weaker company. So you kind of go two ends of the spectrum there. They can even cancel group disability benefits. It would happen on a group-wide basis, not just to someone individually, but it could potentially happen. The big thing is that if you say, I'm just going to go and accept my group disability insurance and then, I'm not going to get individual. Well, if you are to leave that group at any point, you cannot take group coverage with you. So now you might be, right, a few years older. The older you get, the more expensive disability insurance can be. Also, has health changed, right? If you at that point want to get your own individual disability insurance, your age is like, again, you might get older, price might go up, but also your ability to get it might be harder if something in health has changed. So we want to make sure that we get something on the individual disability insurance side. So we look for products that are called non-cancelable, guaranteed renewable. Now, that does not mean that you cannot cancel these policies. It means the insurance companies cannot cancel these policies on you. So just know, these contracts that you have with your disability policies, your malpractice policies, they are non-binding. So, right, you can get out of them whenever, but we want to make sure that when you get set up with them, the insurance companies cannot cancel them on you for any reason, right? If you're paying the premium or if you're receiving disability benefits, they cannot cancel it. Guaranteed renewable, meaning you have the guaranteed ability to renew it every single year with, no sort of issues in regards to that. And the big thing is you're going to have that same contract that you purchased as well. So we like these non-cancelable guaranteed renewable policies. A lot of times with individual plans, the things that we like about them, they are portable. Wherever you go, they go with you, right? So again, difference from group disability. You leave the group, it doesn't come with you. Individual, you could hop from office to office and you're always going to be covered by that disability insurance. Normally, individual policies have somewhat stronger definitions as well. We'll kind of talk about things like the own occupation definition that is very, very important with a disability insurance plan. So, which that'll be something that ensures that you receive benefits if you can't perform, right, your specific job. A lot of times benefits, right? You can get more benefits and higher coverage. A lot of times group plans may only cover up to a specific amount of your income, but if you're making more than that amount, they don't cover that. Now, usually some group plans might cover an income of around, $200,000. An individual plan normally covers an income of four, five, $600,000 a year. So wanting to be able to get you guys the ability to get more coverage if you so do choose to get that coverage. So again, there's a common misconception that you cannot have both types. You can't have group and individual. There are ups and downs to that. If you have, right, individual coverage and group coverage and you became disabled, both of them would actually pay you. So sometimes having a group plan on top of an individual plan can be a benefit in that nature. I guess, a little bit of a downside of having group and individual coverage is that when you maybe want to increase your individual coverage higher, they may limit the amount you can get of the individual because you have some group coverage. So restricting your ability to maybe get more benefit with a little bit stronger policy and coverage. So, just know you should have an individual disability insurance plan, even if it is a really small policy to start. We always put what is called an increase option on these types of policies so that you can bump it up and make it right higher amounts later if you need to get more coverage with that amount or you leave a group or something like that. Okay. Moving on here, there are a handful of different ways that you can customize these different types of policies. So there are, again, a lot of different companies out there, right, that have different provisions and different riders and benefits. There's different benefit periods that you can select. These types of products, right, disability insurance, these are not I would say, one size fits all. Everybody could have a different disability insurance plan with maybe a different disability insurance carrier. So, I a lot of times hear things like, I'm going to go talk to my friend and see what they have. Well, again, make sure you are keeping an open mind to know that your friend could have a different situation than you. They may want more or less of specific benefits. So always try to be customizing the plan to right your specific situation. Different things like if you're just coming out of dental school, going to start working, you may have different rates than somebody who goes into a GPR or an AGD or even a specialty residency. So these products are occupation specific. So how they classify you as a dentist or a dental specialist, could be very different. So again, seeing the different pricing of these products, you might look at a friend who is an orthodontist who you go, why are they paying so much less for their disability insurance than I am, who's a general dentist? It just might be how the insurance companies classify those occupations as a risk to them. So what I see a lot of times as well is, a lot of stuff that people a lot of times maybe read online as they are gathering information about disability insurance can be a little bit misleading because the article you might be reading may be about, the company that you're looking into for your disability insurance, but the article might be talking about a completely different profession. So different professions are rated differently a lot of times in the eyes of these insurance companies. So wanting to make sure, right, you sit down with someone who kind of understands, right, these different benefits, these companies, these riders who can, again, craft it to your specific situation here. So there's a lot of different options when it comes to the disability insurance and how you're sort of going to craft this to basically set it up for yourself. Most important thing that you're going to have on a disability insurance plan here starting off is what is called an own occupation definition of disability. Some companies call it true own occupation. Some companies call it own occupation. Some companies call it medical own occupation. There are a lot of different terms out there that are synonymous. So again, I have heard of some people trying to make it seem like true own occupation is better than regular own occupation. There are a lot of times no differences between the definitions. And even some companies a long time ago used to call own occupation regular occupation. So again, it's just about, getting with someone who understands this, who can tell you, right, can kind of really make it easy to understand these definitions. But we'll call it own occupation right now, just for this sense here. What does that mean? Own occupation means that if you cannot work in your own occupation, these insurance companies will go as far as to deem that as dentistry, right? So if you cannot work as a dentist, or if you are a dental specialist, if you cannot work as an orthodontist, right? This policy, right, is going to pay you your disability benefit, but if you are able to work, go do something else, you can make as much money as you want doing that. And as long as you still are disabled from doing dentistry, the policy is still going to pay you. So this is really the gold standard of definitions, right? I know, all of you guys are highly schooled, highly trained individuals and could do a lot of things outside of dentistry if you had to, right? This own occupation definition allows that. I love to use the example of myself versus a dental professional in this example, right? So say that a dental professional severely injures their, dominant working hand. Say it's their right hand, right? That person probably going to be out of work for a decent amount of time. If they've hurt their dominant working hand, maybe they can't get back to work, right? Because, maybe their hand just never gets back to the way it was. That would be pretty detrimental to their career and their income stream, right? If I severely injured my dominant hand, I could probably just move my mouse from the right to the left, still talk to you guys like this, maybe become a lefty, maybe be able to type with one hand, right? I can still do my job, my occupation to a specific extent, but on the other hand, it would be very detrimental to a dental professional, right? So this own occupation definition specifies us right in our occupations that we were trained to do. Okay. That's why that's so important. Elimination period and benefit period. These somewhat go together. Now, with disability insurance, there is always a period of time you wait before you actually start to receive your disability benefits. Now, this is long-term disability insurance. So that would be the benefit period, right? It's going to pay you normally until retirement ages, age 65, age 67, 70 years old. You a lot of times choose that number when you set your policy up. The elimination period is, again, the period of time you wait before you receive your benefits. Normally, that period is 90 days. I would say 90 days is industry standard. There is a 180-day waiting period, 60-day waiting periods, but 90-day, I would say, is kind of like the sweet spot. So normally, right, you become disabled, you wait 3 months. If you are still disabled, you start to receive your disability benefit for either, right, the longevity of the benefit period or until you are able to get back to work, right? So think of the elimination period as like a deductible with car insurance, right? You pay your deductible, then your car insurance kicks in. Same thing with the disability, but the deductible with disability is in the form of time, right? You wait the 90 days, then the disability insurance kicks in, okay? Residual partial, those words are synonymous a lot of times. So just know residual partial, you see that a lot of times they mean the same thing. This is probably one of the most important benefits that you'll have on a policy. So having a really, really strong partial disability rider is very important. From our experience, about 70% of real life claims that we get are partial in nature, meaning that maybe somebody is still going into work, but something is bothering them, right? They're seeing less patients, working less days, working less hours, right? Their time, their duties at work have gone down because, right, maybe lower back, right? Soon as noon hits, lower back starts killing them and they can't see their afternoon patients. This rider would help supplement a loss of income from being partially disabled. Depending on, again, what company you go with, there are different circumstances where some companies will pay you, but other times some companies won't pay you, right? Some companies say that you can lose, income or time and duties and they'll pay you. Some companies say you have to lose income and time and duties and they'll pay you. So again, knowing those discrepancies, we a lot of times see large discrepancies and large gaps in how much these partial disability riders with different companies will actually pay clients if they're losing income or their time and duties at work. A lot of times it might be, $25 to $40,000 a year that some people might be missing out on because of how their partial disability benefit works. So if it's the largest percent of the claims that we do see, we want to make sure that you guys can, ultimately get the highest partial disability payout. So that's a very, very important rider, something that you guys should strongly consider, having one of the best ones out there and looking into that a little bit more. Cost of living rider, this is just inflation protection. So a lot of people will have this on their policies. God forbid anyone becomes disabled. The cost of living rider would basically kick in if you are disabled to help pay you a little bit more benefit every single year just to help combat the rising costs of everything, right? So nothing is getting less expensive as we kind of go throughout the years here. So we want to make sure that your disability benefits are adjusting for inflation as well. Your increase option, right? I'll elaborate on this one a lot more too, as I did with kind of the partial disability increase option, own occupation definition are kind of like the holy trinity of disability insurance. We need to make sure that we have those things and, very strong in those things to have a really good disability insurance plan. When you, again, apply for this insurance, I mentioned doing that medical questionnaire and going through medical underwriting. Ideally, that first medical questionnaire that you do, we really want that to be the only time that you ever have to do a medical questionnaire so that when you want to increase your disability benefit higher as your income goes up, it will just be submitting, a W-2 tax return, pay stubs to show, hey, my income has gone up. I need more disability benefits. So normally with your increase options, they are only based on financial underwriting. So health is not a factor in increasing your disability insurance a lot of times. Okay. Your increase option is so important, right? You want to have a strong increase option that, doesn't make it difficult to increase. There's no hurdles to get over to increase your coverage. So the big thing a lot of times is how often can you increase your coverage? Some companies say it's every 3 years. Some companies say you can increase your coverage every single year. Some companies say you can only increase your disability benefit when a major life event happens to you. So knowing what type of increase option you might want to have is obviously important for those factors there. Some companies, right, will say, you might ask, am I going to be forced to increase my coverage? Well, some disability insurance increase options out there say that you are required to accept a certain amount of whatever they offer you, or your increase option, if you don't accept that certain amount, will drop off the policy. So some increase options are like use it or lose it type benefits. Other increase options say, hey, your increase options here, you can use it if you want, but you don't have to if you don't want to. And then it's going to be like that the year and the year after that. So knowing what type of increase option, again, you might want, am I going to be forced to increase, not forced to increase, right? Knowing that sort of stuff too is obviously going to be important as you go here. Another question I a lot of times get is, can my contract change upon increase, right? A lot of times I use the example of, when you sign your employment contract, right? Unless it's, your employer giving you more money, which hopefully in the future you will get that, you really wouldn't want a contract, right? A signed contract to be able to be changed in any way, shape, or form once you sign it, right? That's it's just kind of rule of thumb for that. We feel very similarly about disability insurance, right? When you guys get these contracts, can the insurance company change it in the future? And most of the time, the answer is no. Most of the time, when you buy a disability insurance policy, you have that contract. Even when you increase it in the future to get more benefit, it's still the same contract, right? You buy it in 2025, maybe they change something about it in, 2030 or something like that. You would not be susceptible to that change. But there are companies out there that check a lot of the boxes, own occupation, strong partial disability riders, strong riders in these other areas, but also in their contracts they say that when you increase your disability insurance, they're going to base increases that you do off of whatever contract they're offering at the time you actually do the increase, which could be right years down the road. And in their contracts, it might say something like, we're going to be able to change, right? These new increases that you do with these policies, they may not contain the same riders, benefits, definitions, language as the initial policy that you purchased. So again, making sure you have a contract too with your disability plan that is guarantee. A lot of times, again, people won't tell you out what companies out there are able to do that. We are more than happy to say, these are kind of the ones that can, these are kind of the ones that can't, right? So knowing what your increase option is going to do for you, obviously, like I said, important factor, kind of part of that trinity that we see is very, very important. Some disability plans will help pay benefits to student loans if you became disabled. Some pay benefits, extra benefits if you get catastrophically disabled. That would be like you go, blind, deaf, lose limbs. You can't do activities of daily living by yourself. You have a cognitive impairment. Maybe you're in a wheelchair, right? Used to help reduce the burden of a more severe disability a lot of times. Retirement protection. So some companies will pay benefits to retirement accounts if you became disabled. And then some companies will pay benefits for mental health related disabilities. Now, those disabilities, I would say, are treated a little bit different than physical musculoskeletal sickness related disabilities. So again, important to sit down with someone who kind of understands this, who can kind of talk through your specific situation, see what company might be best for you. Again, disability insurance is not as common a commodity as people a lot of times think it is. I mentioned health being a very, very big factor in your ability to get this insurance, right? We do thousands of applications with dental professionals every single year, and probably 40 to 50% of them have some sort of maybe exclusion, as I mentioned, maybe a rating on a policy, which a rating would be like an increase in the price. They could have modified benefits. An insurance company could say, hey, because of this health concern, we're going to not let you have this benefit right now, but maybe you can get it back later, something like that. Also, people can get declined for disability insurance based on health history. So, we have lots of different options that are kind of available to you guys to kind of, again, look at, see which one might be the best fit for you based on a specific situation. So, last thing here on the disability insurance is ways that you're going to be able to pay for this type of insurance. So, a lot of people, right, will sometimes see a cheap price on their policy. And, right, price is obviously a big factor when you are getting any of these insurances, right? Nobody wants to have to pay an arm and a leg to get really good disability insurance coverage. So, there's two types of premium structures that you can go on. So, level premiums being one, graded premiums being another. So you can see here on this chart here, the two factors are cost, right? What's the price going to be? And how old you are, right? How old. I mentioned that the older you get, the more expensive disability insurance can become, right? So a level premium, you can see there, right? This type of premium kind of remains constant throughout life, right? Unless you are making a change to it. So a level premium, a little bit more expensive. But the big thing with a level premium is that it locks in your age. That's the big thing with it. So say that you bought a disability insurance plan when you were 27 years old. You would then be on a 27-year-old rate forever. And even when you want to go increase your policy in the future, maybe when you're, 30 or 35 or 40 and so on, those increases that you do in those later years of life are not based off of, a 35 or 40-year-old rate. They're all based off of that 27-year-old rate you get locked in at. Ultimately, bringing the cost down of disability insurance for you over time because you're locked in at a younger age rate. On the other hand, there is the graded premium, which is the green line on my screen here. So you can see they're at the start, right? A little bit cheaper. Every year, it is an upward sloping curve. So, right, the longer you are on a graded premium, it gets a little bit more expensive. Why is that? A graded premium does not lock in your age yet. Okay. So you might buy a graded premium when you're 27, but every year, right, your rate becomes that of a 28-year-old, then a 29-year-old, then a 30-year-old. So as you kind of go on, it would get a little bit more expensive. So you can see here, right, we don't want to keep a graded premium forever. So what you would do is the orange line there, you would convert your graded premium to a level premium at some point, right? So again, use the example of You bought a graded premium when you're, 27. Maybe you flip it when you're 28, right? Might be a little bit more expensive, but a graded premium is an awesome tool if you are kind of wanting to keep the cost down while not having to maybe sacrifice any benefits to help kind of lower the price. So graded premiums can kind of help cut costs by about 40%. So it is a tool that a lot of times we'll use often. Maybe someone, again, coming out of dental school or a residency program, or someone who maybe wants to get disability when they're in their residency program, right, to lock in their health. They might start off on a graded premium so that they can get the benefits, lock in their health, and right when they can handle a higher premium better, we can flip it to that level premium. You might ask yourself, why can't I stay on a graded premium forever? Well, again, I mentioned you're going to increase this disability insurance over time as your income goes up. And say that you were to keep a graded premium forever. Well, I mentioned that example. You might increase it when you're 30 or 35 or 40, something like that. If you're on a graded premium scale, they're going to base those increases off of whatever age you are at that time. So it's not going to be based off of a, 27-year-old rate when you bought it. It might be based off of a 35, 40, 45-year-old rate. So ultimately, with a graded premium, again, it's a perfectly fine short-term option, not something we would ideally want to keep forever. But again, more of a personal conversation of which might be best for your specific situation. So that's kind of it for disability insurance. So let's move into malpractice insurance. So I know that this is a pretty, fun topic that a lot of people like to hear about. Professional liability insurance, malpractice insurance, similar to disability insurance in the sense that not all the policies are going to be created equally. So there's different types of policies, which I'll get into, different consent clauses. That means what rights does the insurance company give you if you are sued for something? The financial strength of the company matters, right? Do they have deep pockets to help pay for the best lawyers? Or, right, if a claim does have to be paid out to somebody, we have seen times where smaller malpractice companies, they get into a couple of lawsuits where they have to settle or they went to court and the payouts are so large that they drain that malpractice company of all their assets and then they go out of business. So making sure we have a financially strong company. And then the defense, right? What does their defense actually look like, right? How are they going to be protecting you? These are all things that very much matter to us. So, what is malpractice insurance, right? It's a deviation from the normal standard of care that's going to lead to a patient injury or death, right? So, making sure that if something like that were to happen to us, we are covered properly. So, the first thing that we kind of have to understand here are the different types of policies. And what I see a lot of times when I'm talking to people is a lot of people say, they either need to get their malpractice insurance on their own, or they sometimes have to get malpractice insurance through an employer, right? Those are kind of the two different options that we see. Normally, we tell people if you're going to be getting it through an employer, it might be in your interest to consider getting your own. Again, depending on some of these factors that I will kind of go through here in a second. But the two different types of policies are what is called an occurrence policy. The other is called a claims made policy. Okay. So occurrence policy kind of works like how you think your malpractice should work. So it says that if you have your malpractice coverage in force at the time the treatment of your patient occurs, you are covered for that treatment forever, even when you cancel the policy in the future. Okay. So, right, works like how you think your malpractice should work. On the other hand, there is what is called a claims made policy, where it says that you have to have the coverage in force at the time the treatment of the patient occurs and when the claim is made. So you have to have it in force at the time that both of those things happen. If you cancel a claims made policy, you are now not covered for anything that you did prior until you purchase this thing called tail coverage. And it is what it sounds like. It is used to basically cover your tail for all of that treatment that you just did for those patients. Now, tail coverage, right? a lot of times is going to be a lump sum payment that is going to be, you have to purchase it a lot of times that will be due within maybe 30 to 90 days of you canceling your malpractice policy. Okay. So to be covered for all that treatment that you did, you have to purchase that tail, right? If you do not purchase that tail, you're now not covered. So that if a lawsuit happens to you and you don't have that tail coverage, that means you will have no protection and you will basically have to be the one coming out of pocket to cover yourself in regards to that claim, right? So, in the grand scheme of things, occurrence policies are a lot of times what we truly want to try and stick to. They take out that potential headache of having to purchase that tail coverage, which tail coverage, it's a wide variety. Normally, it might be two, three, four, maybe even five times what you were paying for your malpractice on a yearly amount, and it's all going to be due in a lump sum. I've seen tail policies be as little as maybe like, you know, 2,500 bucks for somebody to buy it. But I've also seen tail policies as big as 20 to $25,000, again, due in a lump sum payment. So sometimes, right, if something like that were to happen, those large payments might not be kind of in the budget or the price range for that point. So if you want to take out the sort of, again, headache of the tail coverage, occurrence policies are maybe what you want to have. What I see a lot of times is if somebody is, if an employer is offering malpractice insurance, what I will sometimes see is employers offering claims made policies to different dental students, dental residents who are coming out and graduating. That's why we tell people don't always just accept, malpractice or again, disability on blind faith, thinking that it is, the best thing for you in your situation. Because again, if it's a claims made policy, a lot of times in the contract, it might say something like, if you leave or are terminated from this place of employment, you are required to purchase the tail. So maybe they're covering the cost of your malpractice while you're working there, which is obviously, right, a good thing when you're kind of coming out of school, right? You think free malpractice insurance, but ultimately, you may have to pay all that back and more if you have to purchase that tail coverage if you do leave that place, or again, if you are terminated for some specific reason. A lot of people, I'll get the question of them asking me, will my carrier cover my, tail coverage if I, leave or something like that. A lot of people get misconceptions that a lot of times, since people like claims made policies sometimes because they're usually a little bit less expensive than occurrence policies. And a lot of times you'll hear many insurance companies offering people free tail coverage, but a lot of times for the insurance companies, for you to even get free tail coverage where they like basically buy it for you, you either have to be fully retired, so you have to like have that policy for your entire career for that tail to be free. Um, Basically, you might have to be like a certain age specifically to get that free tail coverage purchase for you, or you might have to be, dead or be disabled to have tail coverage covered for you. So really only specific situations where that tail coverage might not have to be put on you. But again, are those things going to happen, right? Retirement, being a certain age, which is most likely something a little bit later in life, or death or disability, again, occurrence policies are going to cause a little bit less headaches for you. So there are also different circumstances that might require you to have to purchase tail coverage, right? Maybe for you might have been offered malpractice coverage at no cost to you for doing your board exam. And if the policy was not an occurrence policy, if it was a claims made policy, probably needed to buy some sort of tail coverage to cover you for the treatment that you did for that board exam. Residencies, right? We have people that start working into professional practice, but then they might go back and do a residency program. If you had a claims made policy during that time of work, you're going to need to buy that tail coverage to make sure that you are covered for all that time spent in practice. If there was a leave of absence, so you may want to terminate your malpractice coverage if you're taking some sort of leave of absence from practice. And if it's a claims made policy, right, might have to buy the tail coverage. So leave of absences could be things, as, parental leave. It could be poor health. It could be, sabbatical, or it could be, mission trips or something like that. Whatever it might be a need to do, right? Purchase that tail coverage. Relocation, right? A lot of times, like I said, if you are relocating, a lot of times, some claims made policies might not be able to cover you in specific states. So, does your company cover all 50 states that are out there, as well as if you're having malpractice through an employer, maybe you're going to go to a different office, or maybe you're going to work at a private practice, or something like that on the side of, getting your malpractice through that employer. You might not be able to use that claims made malpractice to go and allow you to work at a different place of practice. So again, claims made policies just a lot of times cause a lot more headaches. So getting yourself with an occurrence policy is normally what we tell people. It might be in your best interest to, again, just get your own malpractice policy if you don't want to have to worry about purchasing that tail down the road, because it might be, like I said, a pretty large lump sum payment that might be due to you in the future. Now, I'll explain a little bit of this here. You're going to have limits when it comes to these malpractice policies. So this is going to be like the amount of coverage that you have. So there's going to be two numbers that you'll see, a per claim number and then an aggregate number, meaning that for this example here, you guys might see things in contracts that say they want you to have limits of 1 million, 3 million. In this example, 2 million, 4 million, or 3 million, 5 million. There's different numbers that you can select. There's even some weird states out there that have different limits. So the first number is, in this example, you have $2 million to spend on any one claim that you have against you. Okay, so 2 million to spend on one claim. You have $4 million to spend on all claims in a year's time. So that's like the aggregate number, right? So normally you'll have two numbers like that on a malpractice policy. Again, another reason why we kind of like the occurrence policies more is that you'll see here with an occurrence policy, you get a new set of 2 million, 4 million limits every single year of work. The average just general dentist, general practitioner will treat between maybe 120 to 160,000 patients a year. That is potentially that many times that a lawsuit could maybe happen, right? The number has been getting smaller. It used to be 1 in 5 dentists would be brought into a lawsuit in their career. Then it became 1 in 4. Now it's around 1 in 3 dentists will be brought into a lawsuit at some point. We live in a very litigious society where having extra coverage is always going to be better. So occurrence policies, new set of limits every single year. With a claims made policy, you have 2 million, 4 million limits for your entire career, right? One lawsuit could potentially take that claims made policy out, right? With the occurrence, you have a new set that covers the treatment that you do in every single one of those years to cover you. So we want to make sure, right? We also have enough coverage when it comes to our malpractice, and we see that occurrence policies offer a little bit more. Now, what we'll go into here is going to be, think of this as like the own occupation definition of malpractice insurance. So your consent to settle clause, right? So this means, right, this is going to basically mean what rights is my malpractice company going to give me if I am sued for something, right? And a lot of people, say, right, only bad dentists get sued, or, I'm never going to get sued in my career. Again, people will sue for any and everything these days. They see doctor in front of your name and they think they can get a quick cash grab from you or something like that, right? So having a proper consent clause that gives you the right to fight is what we want. A lot, if not most malpractice companies out there, they want to basically have that right to make the choice for you if you are sued for something, right? Why is that? Well, malpractice companies can usually settle claims for a lot less than if they were to actually go and fight claims in court. So, right, they just want to, settle it, get rid of it, and then that's it. Well, settling a claim, right? So if we kind of think of two different things, right? Settling a claim is basically what is, paying the demand of the person that sued you. There's also the option of going to trial. Trial, right? Litigation system is slow, it's expensive. Nobody wants to go into that. So that's why these companies want that right to choose. Malpractice insurance is like your car insurance. I'll use car insurance as an example here as well, in the sense that if you get into a car accident and it's your fault, two things might happen. That car insurance company is going to charge you higher rates, right? They're going to make you pay more because they think you're not as good of a driver as maybe when you had started getting your car insurance with them. So they might increase your rates. The second thing that they could do is obviously drop you. They could say, hey, we don't want to insure somebody who now that's been in this accident, we consider a bad driver. So they might drop you from coverage. Malpractice is the same way. If you settle a claim, they kind of see that as like an admission of guilt in a sense. If you go to court, go to trial, and you lose a claim, right? Two things are going to happen. They're going to charge you higher rates because they think, well, they got sued once, they might get sued again, right? So we want to charge them more. Or your malpractice carrier could drop you from coverage, right? Then, if you are dropped from coverage, that lawsuit, that settlement goes into a national practitioner data bank where now all other malpractice companies can now see that. So they can now either not let you get coverage with them, or they can charge you right an arm and a leg for them to insure you. So pure consent to settle, that is the gold standard definition. That is what we want. That is what gives you, the dentist, the doctor, the right to choose what happens if you are in fact sued. A pure consent to settle clause might sound something like it says, this X malpractice company shall not compromise any claim hereunder without the consent of the insured, right? That would be you, the doctor, the dentist. So pure consent to settle is what we want. Some carriers out there will advertise this full consent or pure consent. So wanting to make sure, right, that even if they advertise it, do they actually offer it? Or are there certain stipulations within the policy to where they are trying to sort of get around that pure consent and be able to settle a claim without your consent? So it might be something like the term unreasonable or unreasonably withheld, something like that, meaning that if you have the right to consent, right, you have that consent authority, unless the insurance company deems you unreasonable in withholding your consent, right? That is a way, right? They just say, oh, we think you're being unreasonable. We're going to settle the claim without your consent. A way that sort of gets around it, right? If you're unavailable or cannot be located, right? You have the consent unless the company can't locate you or you're otherwise unavailable at the time the settlement or the jury trial, right? A way that they can sort of get around it. Actively insured, that would mean that, you have the right to consent if you are an active insured, unless you are no longer an insured by the company at the time the settlement of the trial occurs. So there's a lot of different, you have the right to consent, right? The consent is yours, but there might be a little comma or another sentence after that that is not pure consent to settle. So again, getting with someone who understands these different companies that are out there who have these certain rights, right? This right to fight is a lot of times enough to scare somebody away to where nothing happens, right? If someone tries to say, "Oh, I'm going to bring up a lawsuit against you," and you have that threat of fighting and it scares them away, you're all good. Nothing happens. Insurance company doesn't ding you, nothing like that. It's when those settlements and those losses in courts happen that we want to make sure, right, that's going to cause the issues in the future here. So having someone who is, again, financially strong, has the sort of dental experience with claims, right? How high is their trial win rate? Industry average for some malpractice carriers out there is around 65 to 70% trial win rate. We want companies that are a lot higher than that to be able to insure you guys here moving forward. So, consent to settle clause is obviously important here. So, wrapping up, guys, that's kind of all I have for you today. This is everything that Treloar and Heisel does. So I know we focus kind of on the disability and the malpractice insurance today. Just know that we kind of encompass any and every insurance that a dental professional might need in their career. So all the personal stuff that might pop up, you want to be a practice owner, all the business insurances that could come up, as well as comprehensive wealth management, financial planning. On the insurance side, to set up, to review current coverage, to do anything in regards to disability, malpractice, or any of the insurances does not cost you anything besides just, the cost of the insurance to either set it up, to review it doesn't cost you anything for, 30 minutes, 45, an hour of my time here. So I know that I'll kind of pass it back on to Wendy here and provide her contact information.
Okay, thank you so much. Um, so I wanted to mention one, thank you so much for speaking to us today
Sure,
and
sure.
giving people the opportunity to learn a little bit more about you and the company and kind of what you do and how you can support them.
Mhm.
Um, I wanted to kind of circle back because I thought that it was really interesting. You said that there's like a database, which I guess it makes sense, but on the other hand, the dental side of me is like that seems a little off, but it makes sense for like the lawyery part where you said there's a
Yeah.
database of all of like the settlements from people who have gone to court or settled
Mhm.
or however you had described that.
Yep.
Sometimes the interviewer in me would love to be able to share some kind of a database of all of the people who no showed me, not one or two or three times, or like they should be red flagged or black flagged or whatever. But it's interesting that they're able to do that for the law. But then again, I think all court cases are public. Is that right? I don't know much about the law in that
Yeah,
sense.
yeah. Most court cases are public. I believe that some don't become public, but most dental trials and dental claims are public. And those, again, all malpractice companies, if they are involved in that trial and that claim, they are, if something does happen, it is not only put into their data bank that, this person, has a claim or a lawsuit on their hands. If something does happen with that, that does go into this national practitioner data bank for now all malpractice companies to see. We've seen it time and time again where even some people that we've insured have maybe all their insurances with us, maybe besides their malpractice, and they have a policy that doesn't have that, consent to fight, and insurance companies settle for them. They drop them from coverage, then they have to go find other coverage somewhere else. We've had times where somebody was paying maybe like, 2 grand a year for their malpractice, but it wasn't that pure consent policy. Now they got dropped, and another company out there is charging them 12 grand now to insure them because of that, risk of them maybe having another lawsuit on their hands. So, it's important. It can be kind of, again, maybe detrimental down the line, right? Nobody hopes to have a lawsuit. Nobody expects to have a lawsuit, but it happens, right?
Yeah. Um, I don't need to really expound a bit more, but I know that lawsuits within dental offices can be so incredibly stressful. So, yeah, I can attest and to some doctors that I've worked with in the past that have struggled through that. Okay, anyways, so just a smidge about me. I am the host. I'm the one who is putting all of this together. My name is Wendy Aldhamen, and I own Career Elevation. We are a dental specific recruiting company where we typically do done for you recruiting, but we also offer other services. If you are an associate or a hygienist, we can help you get placed. We also offer coaching and in both the aspects of the hiring manager as well as if you need coaching to help you as the employee get into a position, we can help you in many different ways. And by hosting webinars like this, these are some things that we really enjoy doing, and we really are here to help the dental community. So if you need me, this is my cell phone number and my personal email. This QR code goes to my website. So please feel free to reach out if you've got any questions. I would love the opportunity to help anybody within the dental community. I've got your back, and Nick does as well.
Yeah, 100%. And I will share my stuff as well. This is personal cell. You can call or text me there with any sorts of questions to set up a time. Like I said, call, text, email, whatever is easiest for you. That QR code there. leads directly to my Calendly, which lets you throw a time directly on my calendar. If you want to chat about something, it'll set us up a Zoom link as well. So if we want to utilize that to do screen share and things of that nature, again, set up a time and we can kind of talk through these different things a little bit more detail. But that's all I got for you guys. So again, Wendy, I appreciate you having me, and this has been a really cool experience. I've enjoyed it a lot.
Perfect. Awesome. Well, good deal. As everybody knows that this is going to be a recording that people can have access to. So if you have any friends within the dental community that are looking for insurance of whatever kinds, because he had like 30 different kinds of things or ways that you can help out. So anything from that sheet or also within recruiting, please feel free to reach out. We're here to support. And thank you so much, Nick, for your time. I really appreciate it. Can't wait for the next one.
Awesome. Me as well. I'll talk to you guys again soon, okay?
Bye.
Bye bye.